Hi traders, going to do an update on the key equity hedge for both the hedge line and the profit taker futures indicators. So we're into May expiry tonight or today if you're in the States, but for the Australian and Asian clients it is tonight. It's the 21st of May, which is expiry, and now we've got a couple of interesting situations with this sell-off, which has been great, and it leaves us with a fair bit of opportunity to make the most out of the profits that have been generated. So we'll just have a look at the S&P. We'll go through the profit taker first to give you an idea of how that's tracked this week, especially with the sell-off. So we'll just go back through the trades that have triggered over the 20th and the 21st. So as you know, we're looking to trade 5 E-mini contracts. So this is the 20th of the 5th. This is a short that's set up. So at the short, we're going to sell 5 E-mini S&Ps. We take 2 off here. We entered at 11.0125. First target's 11.9125. Take 2 off there. Then we bring the remaining contracts to break even, which is at the red line. So first our stop was up here when we entered. When we hit our first target, well, we lock the rest in to not lose any more. So this is a winning trade no matter what happens. So we're looking for target 2 here. So let's see what happens there. So the remaining contracts stay at break even until target 2 is hit, which is where we make our next move. Or if it stops out, goes back up and stops out, well, so be it. So let's have a look. We've hit target 1, so we've got 3 contracts here at break even, and we've got 2 to take off at target 2. So do we get there? Yes, we smash through that. So now all we're left with is 1 E-mini, which we leave in the market until we get an opposing long that triggers. So here's an opposing long here, and that doesn't trigger. So that still stays on the table. Now our next long is here. So let's just imagine that that's the market in live time. So we're coming up, we're still long here, we're looking for an entry, and we trigger in here. So that's our stop for the previous short trade, our sort of hedge with our E-mini, and that's also an entry for 5 long contracts to go long, which we do, and that stops out. So we take a loser there, and then we get into another short trade, which we are still carrying at the moment. So we enter in here, we go to target 1 here. So now we've got the rest at break even, looking for target 2. So the same process continues on. So that brings us for the profit taker. I showed you those trades there. There was the target 1, the first one, target 2, the second one, and there's that opposing long that still gave us 13 points. Then we had that loser, and now we're still live in with our first target hit. So last night we've made nearly 3,000 on the profit taker, and that takes us to 4% for the year so far with our current options trade on. That's due to expire on the June the 17th from memory. Yeah, June the 17th. So now let's have a look at the hedge line for people. We've got about 50% of members who are still trading the hedge line, which is fine. They're happy to wear some of those, or most of those members are sort of the bigger traders with a couple of $1 million under management, and they're happy to take a hit through the choppy period because they know that when the sell-off or the big run comes, well, they're covered, and they're going to make more money that way eventually anyway. So this is the sell-off we had. So let's have a look back here. That apparent mistake back here with the spike down and then it goes back up. Well, who knows what happened there, but we're almost back down to that level where its previous low was there. So we come through and chop out of about 4 trades there, which is about $5,000 loss in that choppy period. So then we get into our short trade here. Now remember that today or tonight in Australian time is expiry for this lot of options. So it's May the 21st. So it's tomorrow daytime for the US clients. Now we're in from 11.54. We're in with 5 E-minis, and we're still live in the market. So we're down here at 11.60 odd. So this move alone, now our aim tonight is to, because our strike point here is at 10.45, right? So the best possible case, we've just made $22,500 US on this move, and that's still profit in the market, which is live, and that's about 90 points. So what we want to do, worst case scenario, we take a small loss on the options, but at the moment we won't. It's going to be about break even, and we're going to take 22,000 off the table. So the aim tonight is to put an order in at the open to get rid of these options, especially even if we can get the puts out, that's fine because our calls are miles away. So we're going to get rid of the puts, and if we take a small loss, it doesn't matter because we're hedged here with 90 points up our sleeve. So it's been a perfect example of how this works. We've gone through a choppy period which gave some people some jittery feet, and they've moved on to the profit taker, and they're happy with that because they're making money out of that as well. It's more of a smooth return. But the people or the traders that are continue with the hedge line, well, they're really raking it in at the moment. They've got 90 points profit here, and they've taken in 22,500, looking to close out these options and then take the profit for the futures, and then wait for the next setup. So there's a few options you can do. You can chance your arm and wait for this to expire tonight or today on the Friday. Your strike points at 11:45. Most traders are. Some are below. Or you can just know that you're going to be up 22,500 on the futures, take the options at break even or a slight loss or a slight win, and reset. So you know that's a pretty handy return. It's between 15 and 30% for the guys traders that continue with the hedge line. Now, if you're an Australian trader and you've put your Australian dollars over in US dollars about a month ago, which most, well, not most of them, but a lot of traders have done that. 6 months earlier, they put US dollars over to Australian dollars over to US dollars. You're absolutely raking it in because the Aussie dollar is getting smashed. And for traders that are using this key equity hedge in a different currency, they have to hedge using another system that we've got. So you're making money on the hedge in the currencies to protect your currency. You've made money on the sell-off on the S&P, and you've also made money on the conversion of your currency to US dollars. So you're absolutely flying at the moment. So I'll just give you an example where the Aussie dollars come from. So for the Australian clients, you would have got in at your conversion rate at least around 90, because it's been that around 90, 91 for quite some time. It even goes way back to March, to January. We're still there. In February, we're at about 87. From end of February onwards, you would have got about 90 to 92 on your conversion, and now we're down to, so we're down to about 80 odd, 82, 83, about 81. So you've made money on the way down there as well. So some accounts in your own currency will be up 50% so far in 2010. So that's just the way that the system works. We hedge as well, and there's a lot of different ways you can make profit using this system. So that's the update, and if you've got any questions, please email admin@keyequityhedge.com. Otherwise, you've got a busy night ahead or day or your tomorrow ahead if you're with US clients, because you've got to close out these options and collect all the profit. So thanks for listening, and we'll catch you again.